You built it wrong. Not because you're stupid, not because you lack discipline. You built it wrong because you built it like everyone else. Pleasure first, payments first, looking successful first, and then if there's anything left, you try to save, and there's usually nothing left. That's the part nobody wants to say out loud. Most people don't fail at money. They just build the whole thing upside down. They put the expensive stuff on top and the foundation last. Then they act surprised when it cracks. You know the feeling. You get the paycheck. You feel good for maybe a day. Then the bills start hitting. Then the subscriptions. Then the forgot I signed up for that charges. Then the thing you promised yourself you'd cancel but didn't. And by the middle of the month, you're doing math in your head at the grocery store, not because you're broke, because you built it backwards. Here's the uncomfortable truth. If your financial plan depends on whatever's left, you don't have a plan, you have hope. And hope is not a strategy. Hope is what scammers sell, because this is the game. The world will happily give you instant pleasure on a monthly payment. New phone, new car, bigger house, a limited time deal, a lifestyle you can rent with debt, and it feels good for about 5 minutes. Then the bill shows up every month forever. You ever open your banking app on the first week of the month and feel that little drop in your stomach? Nothing catastrophic happened, no disaster, just the system you built quietly collecting its payment. That's what backwards money feels like. Not dramatic failure, just slow pressure month after month. And the weird part? You stop noticing after a while. The pressure becomes normal, the stress becomes background noise. You tell yourself everyone lives like this, and maybe they do, but that doesn't make it smart. Do the boring stuff. It works, but boring doesn't get applause. A new car gets applause. A paid off car doesn't. Investing $300 a month gets no applause. A Rolex gets applause. And most people are building their entire financial life around applause from people who don't even like them that much. I'm not judging you. I'm judging the order. Today, I'm going to show you why most people build wealth backwards, why it collapses, and what to do instead without turning your life into a joyless spreadsheet. And yes, I used to do it backwards too. I know exactly what it feels like to have zero savings and pretend you're fine. Let's fix the order. If you want a simple picture, it's this. Most people treat saving like a leftover. They build the lifestyle first, they lock in the payments, then they try to be responsible after. But once you lock in a car payment, a mortgage, subscriptions, upgrades, and a little treat yourself spending, you're not choosing anymore. The month is choosing for you. That's why the inverted pyramid is such a perfect visual. At the top, you've got the flashy stuff, nice car, nice house, nice life. Under it, the real support is tiny. A small savings account, inconsistent investing, and no margin. One surprise bill and the whole thing wobbles. And the scary part, it doesn't wobble on day one, it wobbles on year 3. When the car needs repairs, when the job market shifts, when rent jumps, when life happens. Backwards wealth building is basically this sentence. You spend first, and then you hope you can save later. And hope feels fine when everything is stable, when the paycheck hits on time, when nothing breaks, when nobody gets sick. But stability isn't a strategy, it's luck. And luck runs out eventually. Money doesn't disappear, you spend it. This isn't just financial, it's human. Your brain loves instant reward. It loves now. It loves the feeling of progress today. And it's not your fault. Your brain wasn't designed for index funds. Your brain was designed to keep you alive, feel safe, and fit in with the tribe. Buying things gives you a hit of dopamine. Saving money does not. Investing is invisible, it's quiet, it's delayed, it's boring, and because it's boring, people replace it with something that feels like progress. They upgrade the phone, they upgrade the car, they upgrade the apartment, they upgrade the wardrobe, they upgrade the identity. It feels like winning. Think about the last time you bought something that made you feel good for a week. Maybe new shoes, maybe a gadget, maybe dinner at a place you couldn't really afford, but went anyway. You felt it, right? Then the feeling fades and you're back where you started. Now you have less money and the same problems. But a lot of those wins are just future bills in disguise, 5 minutes of excitement, 60 months of payments. The trap is that you can feel successful while building zero wealth. You can look rich while being broke. You can have the nicest car in the parking lot and still be one missed paycheck away from panic. That's backwards. Speaking about the importance of the long term, I'm going to mention a famous experiment from the 1960s and early 1970s. Psychologist Walter Mischel and his colleagues conducted a series of studies at Stanford's Bing Nursery School that later became known as the Marshmallow Test. Preschool kids were offered a choice: take one treat now or wait, often around 15 minutes, and get 2 treats. Researchers watched the strategies kids used, covering their eyes, turning away, singing to themselves, anything to avoid staring at the reward and giving in. Later, follow-ups found correlations between longer delay times and various later life outcomes, which helped make the test famous. So what's the honest takeaway? People who can delay reward tend to do better over time. But the skill is not just willpower, it's strategy. It's self-control plus systems. It's the ability to build a life where delaying reward actually makes sense. That maps perfectly to money, because building wealth is basically adult delayed gratification. Except the treat isn't a marshmallow, it's a car payment, it's an upgrade, it's a vacation you can't afford. Most people take the one marshmallow now. Adults don't fail the marshmallow test in preschool. They fail it in dealerships, on Amazon, and in mortgage offices. If you want to know why scams work, it's simple. Scammers sell speed, they sell skip the boring part. They sell wealth without waiting. They sell what banks don't want you to know. They sell certainty in a world where real wealth is built on patience. And that's exactly why so many people get stuck. Because boring money rules feel slow, and slow feels like losing, especially when your friends are winning on Instagram. So people try to compensate. They don't build the base, they chase a shortcut, they buy a course, they buy a signal group, they take on risk they don't understand. They do anything except the boring stuff. Consistent saving, consistent investing, and consistent restraint. And when the shortcut fails, they don't just lose money, they lose time. And time is the one thing compounding actually needs. This isn't exciting. That's why it works. And let me say it clearly. If your plan requires you to be lucky, it's not a plan. It's gambling with better marketing. Here's where it gets emotional, because this is the real reason people build wealth backwards. They're not spending for themselves. They're spending for an audience, coworkers, friends, family, people online, a version of themselves they want to be seen as. And the worst part, half the time, nobody even notices, or they notice for 2 seconds and move on. Meanwhile, you're the one paying the bill for 5 years. You finance the car to look successful at work. Then you sit in traffic in that same car, stressed about money, trying to convince yourself it was worth it. You upgrade the house to feel like an adult. Then you fill it with furniture you don't need. Then you pay for maintenance. Then you pay for repairs. Then you pay with your piece. You scroll through someone's vacation photos and feel behind. So you book a trip you can't afford. You post the photos, you get the likes, and then you come home to a credit card bill that'll take 6 months to clear. And here's the thing, nobody tells you. The people you're trying to impress are doing the same thing. They're faking it too, they're stressed too, they're just better at hiding it. You're stretching your financial life for people who won't stretch theirs for you. I'm not judging you. I'm judging the decision. There's a reason the ant and the grasshopper story never dies. One of them enjoys the moment. One of them prepares. And it's not about morality. It's about reality. Winter shows up. Winter is job loss. Winter is an emergency. Winter is a rent increase. Winter is an unexpected medical bill. Winter is a car repair. Winter is life. If you build your finances on pleasure now and savings later, winter doesn't just hurt, you collapse. That's not dramatic. That's math. Let me make it personal because I'm not preaching from a mountaintop. I did it backwards too. I had seasons where I told myself, I'll save when I make more. I had seasons where I thought the upgrade was a reward. I had seasons where my confidence was higher than my bank balance. And I had seasons where I had zero savings and I was one surprise expense away from panic. That is a horrible feeling. You start doing mental gymnastics for every purchase. You start checking your account like it's a heartbeat monitor. You start feeling behind even when you're working hard, and you don't talk about it because you don't want to look irresponsible. You skip lunch with coworkers because you can't admit you're tight on cash. You decline invitations and blame it on being busy. You refresh your banking app hoping the numbers change. They didn't, but you're not irresponsible. You're just living in the wrong order. Money doesn't disappear. You spend it. Here's the rule that changes everything. You don't build wealth by adding more. You build wealth by building in the right order. The base is boring. Emergency fund, high interest debt under control, consistent investing, low fixed payments, then lifestyle upgrades. Most people flip that. They start with lifestyle upgrades and they call it motivation or I deserve it or quality of life. Listen, quality of life matters, but if your quality of life is financed, it's rented, and rented lifestyles are fragile. Wealth is options, wealth is stability, wealth is breathing room, and breathing room comes from the base, savings, and margin. Now the practical part. Step 1, build a floor before you build a ceiling. You need a buffer, even a small one, because the moment you have a buffer, life stops being an emergency every time it sneezes. Start with a starter emergency fund, not perfect, just real, enough to cover the most likely surprise. Car repair, medical copay, travel for family, whatever. And the psychological shift is immediate. The moment you have a buffer, you stop reacting and start deciding. Step 2, pay yourself first automatically. If you wait for leftovers, you will never build wealth. Your lifestyle will eat it every time. Automate saving and investing on payday, even if it's small, especially if it's small. Consistency beats intensity. Step 3, cap the big payments. Car and housing are the two silent killers. If your car payment makes you wince, you don't have a transportation plan. You have a stress subscription. If your housing payment leaves you with no margin, you're not buying a home. You're buying a financial chokehold. Downshifting isn't failure. Downshifting is strategy. Step 4, add a delay rule for upgrades. This is the adult marshmallow test. Any upgrade over a certain amount, pick your number, wait 30 days, not to punish yourself, to separate I want it from I built the base. Most cravings die in 30 days. The smart ones survive. And if it survives and fits your plan, buy it with intention. Do the boring stuff. It works. This is the part most people avoid because it's uncomfortable. Ask yourself this: would I still buy this if nobody saw it? If the answer is no, you're not buying the thing. You're buying a reaction. And reactions don't build wealth. Systems do. You want to know what rich looks like? Rich looks like saying no when you can afford to say yes. Rich looks like margin. Rich looks like freedom from the monthly pressure you used to think was normal. Rich looks like sleeping through the night without checking your bank balance at 2 a.m. Rich looks like your kid needing something and you don't have to calculate whether you can handle it. Here's your takeaway today. Pick one area where you've been building backwards: car, housing, upgrades, subscriptions, whatever, and flip the order for the next 60 days. Not forever. 60 days. Build the base first. Automate saving, protect margin, delay upgrades, stop renting your identity on monthly payments, and notice what happens. Your stress goes down before your bank balance goes up. That's how you know you're doing it right. Because the goal isn't to look rich. The goal is to be free. Money, no fluff. And if you want the next step, click the video on the screen, because in the next one, I'm breaking down the truth about saving your first $10,000 and why most people do it in a way that makes it harder than it needs to be. Do the boring stuff. It works.